Hello traders, welcome to my YouTube channel, MRS Trade, and of course Emmanuel Odogwu here. Today we're going to be talking about equity. Please, if this is your first time of joining me on this channel, please do well to subscribe, click the subscribe button, and of course like and share this video. Okay, you see the subscribe button at the bottom part of this video. So let's get started. Equity. Let me start by saying equity is the quality of being fair and of course impartial. But that's not what we're talking about here. Okay. So all equity is the value of the shares you bought from a company, and that's a bit close to what we are going to talk about. Okay. Now, equity on the global financial market and of course on the trading platform. Okay. So equity right now. So equity on the trading platform, MT4 or MT5, right, as the case may be, depending on the particular broker you're trading with, it is the total monetary value you have in your trading account, the total monetary value. You know, before you start trading, you should have a capital, right? So when we say it's the total monetary value, it means it can equally be the capital you have. So equity, from what I'm saying, equals your balance. So the balance you have in your trading account is the capital, right? So equity equals your balance. Now let's start with this because equity have different sides to it, but let's establish this first. So for example, let's say your capital you have in your trading account is 500,000 naira. It means automatically, from what I'm saying here, your equity will also be 500,000 naira. Let's move on. So equity is the sum of your balance, right? Now we're looking at more detail to the equity, okay? It's the sum of your balance, your floating trade, that means your running trade, and the credit amount you have as bonus. So if you look at this very well, you'll see that there are three things here. Number one, it is the sum of your balance, that is the capital you have, right? Plus, if you have placed a trade, we'll call it floating trade, or you have placed a trade, floating trade, and that trade can either be in positive, right, or in negative, and of course, plus your credit amount. Like most brokers do give this bonus, right? Most of them are first-time bonus, right? Like in several brokerage firms, you get bonuses. Okay, please. Very important. And of course, the credit is there to boost your equity. We are going to see that in the course of the video. Please don't forget again, if you're enjoying this video, you're getting value from this video, please do well to share and of course also like the video. Okay, so please, when we say floating trade, let me explain what it means. A floating trade is a running position on any financial instrument. That means you place a trade and that trade is still running. It has not closed yet. We call it a floating trade. Now, you know, that floating trade can either be in profit, so we call it floating profit, and it's usually on blue color, right? Then also it can also be a floating loss, and it's usually on red color, and you see it with the minus there. Okay, now don't forget, equity once again is the sum of the total balance plus the floating trade, and of course plus the credit amount. Let's look at it in a more mathematical form. So balance, from what we're saying, equity is simply balance, your balance you have, plus the floating trade, which can either be in positive or in negative, plus the credit. Okay, so something like this. Let's assume your balance is 500,000 naira as your capital initial deposit, and of course, let's say you have not placed any trade, right? So the floating trade will be 0. Then, of course, let's assume you don't have a bonus. You have not been given bonus on your account, right? Or the broker doesn't give you bonus, for example. So if you have something like this, it means the equity automatically will equal the balance, of course, because the floating is 0. So let's take a look at this example. Let's say you place a sell trade on Euro US, that's European Euro versus United States dollar. And of course, you're doing that on M30, for example. You saw that the market was going down. You now decide to enter a sell, right? To take price lower. So you place a sell, let's say 0.03, the volume or the lot size. And of course, after some time, the market has moved down. It has moved down very well, right? That means you are now in profit. So the profit you're seeing is called floating profit, right? Or potential profit. That means you have not closed it. So in that case, let's say your balance is 500,000 naira, right? And your floating trade, that means the trade you have, let's say it has given you a profit, a floating profit of 2,500 naira. Let's also assume your credit amount, you don't have bonus on the account. In this case, your equity will be the balance of 500,000 naira plus that your floating trade that is still running, right? That is still going up and down, but it's still in profit. 2,500 naira plus the bonus amount, which is 0. So in this case, your equity amount will equal 502,500 naira. Now, this value is the value that will keep changing because the floating trade will keep moving up and down. Let's look at this other example. Let's say you place a sell trade again. You saw that the market was about going down here, right? So you now enter a sell at this very point, sell trade on USD card on H1 time frame, let's say 0.02 the volume. But after you place the trade, after some time, the market starts going up and up and up and up. That means that your trade is not in profit. The trade is showing you potential negative, right? But not loss, okay? Because it is still floating, it's still moving. There is still potential for the negative to reduce. As you can see here, red candles, that means the negative start reducing, okay? So in this case, let's say you have a balance of 500,000 naira. So in this case, you have a floating trade, right? A floating negative trade of minus 2,000 naira. Now, let's say you have a credit of 0. That means you don't have any credit. In this case, your equity will be your balance of 500,000 naira minus that your floating trade that is still running, right? Remember, you place a sell and the market is going up. So it will be minus 2,000 naira, your trade that is running on negative, plus the credit amount. So in this case, your equity will equal 498,000 naira. But remember, this 498,000 naira is floating. That means it will keep moving up and down because this negative trade is not constant. It will keep moving, right? So in this case, you can see that your equity amount is lower than your balance because the floating trade is on negative. But over here, the equity amount is bigger than the balance because the floating trade is in positive. So when you close this trade, for example, this first one, when you close this trade, right? So that is when the balance will now reflect what is showing on the equity. That means the balance will now be this amount, right? The balance will now reflect this amount, 502,500. Also, in this case, if you close this negative trade, right, then it means your balance will now drop from this 500,000 to this amount. So this is what happens. So let me take you to the live chart so that I can show you how this whole thing plays out on the chart. So on the chart here, you can see that there is a running trade. Here you can see there is a running trade. You can see the balance. Yeah, now this is for the laptop. You can see the balance here. You can see equity. If you look carefully, you will notice the equity amount is bigger than the balance, right? Why is it bigger than the balance? And it keeps changing because look towards the bottom right, you see that I have two running trades. I have a sell on Euro USD and also have a sell on GBP USD. So you can see that they both trade are in profit, right? So this profit plus this profit, potential profit, right? Floating profit is what is giving us this 7,000 naira plus. So the balance is simply the equity is simply the balance plus this running trade. So that's what I'm trying to say, plus this running trade. And that is the amount that is reflected in this equity. Now, this is for the laptop. Let me show you this same thing on the phone. So for phone users, you're going to have something like this on your phone, right? So this area, of course, is called the trade terminal. So this is the balance, as you can see up here. This is the balance, right? Now, the equity, look carefully, the equity is bigger than the balance. It means the equity is also calculating the floating trade. So this plus this is what is showing up here, right? So the equity is simply this balance, 408,000 naira plus this floating trade here, which is in profit. That is why it is bigger. Now, if you look carefully, you notice the equity keep changing. So this is what we have on the phone. So this is how it reflects on the phone. So let's assume now, let's look at the example of you having a bonus. So let's say you have a bonus of 50% of the capital, right? So 50% of 500,000 naira equals 250,000 naira. So let's assume there is no trade, you have not placed any trade. In this case, your equity will reflect 500,000 naira as capital plus plus the running trade, that is zero because you have not placed any trade, plus the bonus amount. So that will give you 750,000. So this is the amount you have to trade because the bonus or the credit is reflected in the equity. So this is one of the advantage of having bonus, because ordinarily, if there was no bonus, you would have been trading with just 500,000 naira. But in this case, now you are trading with 750,000 naira. Okay. Now, let's assume you have bonus, right? And you also have a running trade. So balance of 500,000 naira, floating trade of 20,000 naira, right? That means you are in profit. Then you have a credit of 250,000 naira, that's 50% bonus. In this case, equity will be 500,000 naira plus your running trade of 20,000 naira, right? Plus your credit of 250,000. So in this case, your equity will equal 770,000 naira. So from what we have seen it means if you have a balance of, if you have a running trade, right? If you have a running trade and that trade is on profit, right? So your balance is 520,000 naira. Let's say the trade is on profit of 20,000 naira, right? So your balance will be 520,000 naira. Your equity, right, which is the balance plus the running trade plus the credit, so that will give you 770,000 naira, as we saw in the previous example. Then your credit is 250,000 naira. Then in this case, your free margins, I've introduced a new term, free margins. I'll cover this free margin in another video. Okay. Now, from what I have done here, you can see that the balance is 520,000 naira. It means when you initiate a withdrawal, when you want to withdraw, it comes from the balance amount. That means if you place a withdrawal right now that you have closed your trade and you don't have any running trade, your withdrawal comes from the balance. Okay, so you have made a profit of 20,000, you can decide to withdraw. Please don't forget to like this video and of course subscribe. So if you look below at the bottom right of this video, you'll see the button there, subscribe. Do it to subscribe. Thank you very much. See you on the next one. This is Emmanuel Odogwu, MRX Trade. Bye for now.